Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick, who will be in and out with us throughout the hour as he traverses this volatile market. Joel, you're right in the intro. This is a volatile puppy. We are officially, or at least as of the close, we were in the red for the year. I think the S&Ps has come back a bit overnight here, but just between the volatility in the market and 190 something stocks reporting earnings today, where we have 192 is the number of stocks reporting earnings today. We have a lot to discuss. We will be joined at 8:35 by our guest, Kenny Polcari. He's the head of NYSE floor operations for O'Neil Securities. He'll talk us through the market or give us his point of view in about a half hour or so, but let's just get right to it, Joel. What's happening in the overnight?
We're on the rebound here. Just blood bath on the close there. I don't know if it was some margin selling or a big MOC orders, but we got all the way down to 52 and a quarter, closed at 64 and a quarter. Your pre-market lows above that, 58.75. So got to give it that whole 6-point area. There's a potential buy zone here. Mid-range on the session, let's see where that comes in at. Mid-range on the session comes in at 67.75. No, that can't be right. Got to be higher than that. No, 75.75. So another 10 points lower. You'll find mid-range on the session. That could be your first area of support. Crude on the rebound, up 20 cents here at 67.02. Three lows in the same area here, 65.74, 66.05, and 65.99. So potential triple bottom in crude. Gold up 320. Really didn't get the boost you would thought with the market selling off. Let's see, could that gold make a new high of the move there? No, it didn't, but you do have some resistance forming at the 1240 area. Silver in the red by 7.6 at 14.75.
All right, Joel. The question, I guess, of the day is what are we going to do now? You know, we had that little bit of a rally on Tuesday. It sort of faked us out there yesterday morning, but it, looks like that.
Inside day. I'm looking for an inside day here. Obviously, we are not going to go back up and take out yesterday's high at 27.50, and we got to drop another 30 handles. Well, you never know. Anything could happen, but I don't think we're going to take out that 52 and a quarter low from yesterday. You got a couple other May lows underneath that, 26.21 and 2600, but some decent earnings reports here. Nice bounce overnight. So let's see. We might even trade. I don't know if we'll trade with inside the pre-market and after hours range, but above 26.92.50, not much in there. Maybe 2,900 is a psychological level.
So we're looking for an inside day. Let's say it's not. That tells you we're still going down.
Oh yeah. We take out yesterday's low, and really, there's no substantial numbers because when we came off those lows in May. 2,600 and 26.21. I mean, that's just, that when there's air on the way up and air on the way down here. But there are going to be a lot of people that would love to see yesterday's low that sold on the close yesterday or didn't buy here. So going to find some buyers here. Like I said, yesterday was or on Tuesday, I said it was kind of like an unhealthy rally. Well, yesterday was kind of just like
you were right. You're right.
Yeah, and I could have almost won a steak dinner bet from Dennis in one day, except I tried to get a little edge on him. I tried to go up 60 points, me only 40, and boom, he caught it right away, man. Can't get anything by that guy, but he's locked down in there. He's got a lot of positions trading out of it here. Probably some pretty good liquidity here in the after hours and the pre-market this morning because, boy, oh boy, I think that it said 192 companies reported earnings. So what we're going to do is we're going to start, and even if we're on all day, we're going to cover all 192 companies.
We'll be here till the close. No, you were right yesterday. You were the one, preaching caution. Dennis was the more bullish of the two of you. Got to give you props.
Okay, thank you.
You were right there, and we'll give you props on Twitter because I guess technically you were right on that too. It took a little longer, but you were right. So let's go to that report.
Yeah, holy macro. What did they do?
Yeah, we'll go to that report first as I pull up the chart here. Twitter reported this morning, Q3 EPS 21 cents versus a 14-cent estimate, sales of $758 versus $702 million, so well above the estimates for the Q3 numbers. The average daily user growth was not great, up 9% year over year. It was up 11% last quarter on a year over year basis. So we're going to continue to see that sort of plateau, but the earnings and the sales beat is what we wanted to see.
Yeah, and they did a lot of work on cleaning up the platform. I noticed that I lost some followers, and it just said, I just read things that they were just cleaning up the platform, getting rid of a lot of the trolls here. So a lot of people perceive that as a negative, where it really wasn't.
It is a negative in terms of like user growth.
Yes.
But if that's all you're looking at,
But just from a fundamental standpoint, and I've heard you say it, I've heard Brent say it, I've heard Dennis say it, it's like if there's something happening and you want some specific news on something and you want to find out what's going on, Twitter's the place to go. Twitter is a place of fun. Now, have they monetized it in the best possible way? No, but they're certainly trying to work on it. Good numbers here. Back over $30 here. From a technical perspective, 31.50 is your round level, but 31.69 here in your last three brackets. Your highs were 31.69, 31.69, and then 31.66. Now we're back at 31.21. So I don't know. Maybe someone bought a big piece on the close and they're trying to wiggle out here, but 31.69 is my level on the upside. Do we have anything in the dailies? Yeah, you have a high at 31.44 that confirms that. And then things really open up. But let's use 31.50 as our bogey this morning here in Twitter.
I think the expectations were so low. This was their best quarter in terms of EPS ever that they'd ever had. And let me see in terms of revenue too. Yeah, I think this was their best quarter ever in terms of revenue and EPS. So, low expectations, but got to give them credit where credit is due. They had a good quarter. So now I guess it's can they sustain it for 2 quarters or 3 quarters?
Here's the thing here. Look what they did to it after it had that bad quarter, and they just pounded it. So is it going to be the same scenario here? Boy, it's going to be hard now. To take. I'm long from a long-term perspective, didn't play it from a shorter-term perspective. But, man, if you're waiting for this thing to fill the gap, you got to wait for 29.77. And also, I think I pointed it out to the guys on the desk here. I like to look at things relative to the market. And on October 11th, this made a low at 26.19. The market went considerably lower since then, yesterday and a couple of other occasions, but the lowest it's got was 27.31. So to me, that's showing relative strength over to the market. And from a perspective of, the stock has had, been beat up since its last quarter report, you could see where some of the institutional money was flowing here. So let's see. Certainly not back at $40 yet where we'd all like to see it, but certainly a nice start up 3.5 today. If you're really waiting for a while, it's really only a buck or so away from filling the gap, right? 29.77 was your high from yesterday. So I'd love to see it $30, and I'd be interested in perhaps initiating like a short to medium term long.
All right. Got to go, I guess, to Tesla now. The other big one. There was a lot of big ones here this morning and yesterday, but these are probably the two biggest ones. Tesla, for the first time since they really started turning out cars, they're profitable. First time in like 2 years. I'll read you the numbers here for Tesla. Q3 adjusted EPS, $2.90. So very nice there. 19-cent loss was the estimate there. Sales for the quarter, $6.82 versus $6.3 billion. So coming in higher compared to expectations on the sales and the EPS. They delivered a little over 56,000 Model 3s in the quarter. Musk said on the call they're on target to meet expectations in terms of Model S and X deliveries this year. What else did he say? He also said they have no intention to raise equity or debt. So I guess they've got the cash they need. And all in all, really, really good. Another really good quarter.
Yeah, and Mr. Musk has been staying off Twitter here a little bit. Kind of navigated the the waters there with the takeover and the makeover and the SEC, and then taunting the SEC, and he seems to have put all that behind us for now, trading up $30.74 here. Your pre-market high was made, had a steady climb. Pre-market high is way up at 332. So I will just say caution here. We have backed off $12, $13 since that level. So maybe if you're looking to get a little bit more out of the long, unless you're just going to hold it forever, maybe get a quick order out there at 330. I think the longer it takes to get out, take out that pre-market high, there's more of a chance here that you could fade here in Tesla Motors. And man, to fill the gap from yesterday, what do you need to do? You need to get down to 304.44. Good quarter. Dennis said that it's probably the hardest. He says when he has even a portfolio position in that, he can't take his eye off it. So tough stock here, but nice report. 400,000 shares have traded, up 31.50 at 320 even.
Yeah, what can you say? Twitter and Tesla, both really good quarters. Let's go to one that didn't have as great a quarter, and they've already had 4 million shares traded this morning, and that's AMD. I'll just read the numbers here. Q3 EPS of 13 cents, that beat by a penny. Sales of 1.65 versus 1.7 billion dollars, so a slight beat and a slight miss respectively for the third quarter. The Q4 sales guidance was light. 1.4 to 1.5 billion is the range they gave for their Q4 sales. 1.6 billion was the estimate. You don't want to see lead guidance in this market. So Joel, talk us through this AMD chart here.
Sid is asking is it a buy now? Well, it's a buy if you're short. I mean, this is like a windfall for it. Ben, another tough stock, one that just, my timing just a little bit too early with some puts. I should just do leaps. Every time I think I'm going to do something, I'm going to do a leap and find it. Just had that incredible run. I mean, from 10, you look at this thing was under $10 here. And you had an 879 low in March. You go up to 34.14, and then you got a bunch of price target. This is just like Micron Technology all over again. When it went to 60, that's all past history here. I'll give you your pre-market low of 17.05. So you're $1.50 off that low, and buyers have stepped up to different levels since then. 17.50, 17.42. Keep an eye on what's the highest we've been. We've been as high as 1866 here. So just kind of creeping up here. I don't know what the big boys are going to do on this one. There could be some people just throwing in the towel, but I'll use the pre-market low as excellent support, 17.05. And then what do you got on the monthlies? You got monthly support. You had a low in August at 18 even. We're still above that, so I'd use that as a possible target on the downside too. In order to fill the gap from yesterday's range, you got to get up to 22.75. Don't think that's going to happen today, but just keeping an eye on the pre-market low.
All right, sticking with our, I guess we're going to some of the losers now. So let's look at LUV. Southwest Airlines reported Q3 EPS of $1.08. That beat by a penny in sales of $5.57 billion, which is in line with the estimates. So essentially in line earnings for Southwest, and I guess it just wasn't good enough.
No, down, $10 here. If you go back to the high of 60.86 on October 17th. You're just sitting at the lows of the pre-market session. 50.76. Haven't got a big bounce on that yet. Perhaps some more sellers here in this one since you haven't had a bounce. Monthly support, you got to like $50. That's $1 away. Here's some monthly lows that you had. 50-20, 49-93, and 50-50. So nice round number like that. Let's see if you can find some buyers at $50. Longer it takes to get there, I think more of a chance you might get a little bit of a rebound. But boy, this thing has really been shellacked here. Even, how high did you get? You were at $64 at the beginning of the month. So big haircut here. I guess it just depends whether shorts want to press their bets or take some chips off the table.
You know what? Let's go back to the semis for a second, because we looked at AMD and you mentioned Micron. I'm going to look at it, but I do want to look at NVIDIA also this morning, just because they all tend to trade together. We saw this a couple days ago with TSM.
Holy mackerel! This thing has lost $100.
Yep.
This thing has lost over $100. Oh my Lord. Look at this. 292.76 trading at 196.20. I mean, I don't know what to say about this. You would think 200 would be a psychological level.
Not anymore.
If I was short, or maybe even thinking of a long in this one, I mean, we couldn't look at a more bullish chart than this one, huh? Look at that. 194.50. That was your low. That's your yearly low. And then add 100 points onto that. So only $1.50 away. Not sure when they report, but I do like 194.50 on the downside. It's only $1.50 away here in NVIDIA.
Let's look up when they report. November 8th. That's not confirmed, so it's approximately around that time. So the second week of November. So we still have a ways to go.
Holy.
And a lot can happen in 2 weeks.
Yeah. And report here. A trend, it was your friend in this one, and all these stocks, and they were going up. And the trend is not your friend on the way down here if you're long.
And then what about Micron here?
Micron, same story. Got the analyst love. Oh, we're going to $100. So, that's another thing too. One of these guys going to come up with their, their revisions and lower their estimates and lower their price targets. So that's something you got to be leery of. Trading up only 32 cents here at 35.75. Really not much of a bounce. Pre-market high comes in at 36.24. And what was yesterday's low? Yesterday's low was 35.40. So it looks like you might get a chance at that area. On the monthly charts, you had a big move up from 32 to 38. And that was in the month of October of last year. So I'd use half and whole numbers in here if you're trying to accumulate a long or cover a short.
It just seems like, everyone that I talk to is in agreement that long term, these semis, they are buys. They're all buys. But the action from this year, they got overdone, rose up way too far, way too fast. And you can't buy it up here. But everyone that I've spoken to agrees that these are good long-term plays.
I know so little about this sector.
Well,
what do I know?
I don't know a lot, but that's why I defer to the people who I
when you mentioned semis, I think trucks. I do. I mean, who knows who all these chips and what's going to, who knows? I couldn't tell you what Micron, how a different chip from AMAT, from AMD to, someone saying, look at Xilinx, ZLNX. How can you tell the difference between all these chips? Who makes the chips for iPhones? I'm bullish that.
But we can read a chart though. So
yeah, I don't. It's just so hard. And now and someone's making a point here. PE is just at 3 right now, like low PE. Like Dennis talks when he was investing this one. He was talking about was it the PE was slow. They make so much money. Well, look at the PE in Apple. That's always been historically low. So, P's can do something, but, market momentum and market forces a lot of times can overrule the PEs. It could go down to 1. What was its PE when it went down to $10? So, that's something you got to, value traps is something you got to be careful of.
All right. Looking at my list here, where should we go?
We got Twitter on the fade a little bit here, back under $31, still up 30.26 here. Longs coming in here, booking it. It was down in lower 27s yesterday. And you got a little bit of a fade in Tesla going on. Not much. You are now $15 off your pre-market high at 332. 315 will be your number in Tesla. Remember, we talked about the loose trading range that it had. Well, now it's breaking out above the trading range. We'll see if anybody had booking profits here in Tesla or Twitter.
Let's go to Microsoft from yesterday.
Mr.
So,
Soft.
yeah, Microsoft reporting Q1 EPS of $1.14 versus a 96-cent estimate. Sales of 29.1 versus $27.89 billion. So they beat on the EPS. They beat on the sales. What do they say on the conference call? They say they're for the Q1, for the past quarter, their commercial sales guidance, actually their guidance would be growing 19%. So strong guidance for commercial sales. They said CapEx is in line with Q1. What else did they say? They said PC sales will be about $13 billion for the upcoming quarter. Generally just strong or inline guidance. And I know there was some confusion about the Microsoft earnings. I think the release on the site had a link to the wrong report, or it had linked to the report from the previous quarter. So I wouldn't be surprised if that impacted the after hours trading a little bit there, because there was some confusion that we had on the desk in terms of what the actual number was. But let's look at the Microsoft chart.
Taking a look here, you spiked down under $100 and boom, you got a rebound here, trading up $3.33. You're back into yesterday's range. You're $2 off that pre-market high of 107.38. Wow, this really got a jump here. For Microsoft here, long term, needs to get back over 109. Your last two sessions highs, 108.97, 108.49, and I just did a loose 50% retracement. You had a all-time high of 16.18. You basically had a 15-point move, 7.5. You add that takes you back to 108.5, 109 area. So if you're looking at your Microsoft here long-term and you're thinking of selling it, just wait to see. If it could get up to 109, get back over 109, I think you got a chance to go back up to the all-time high. But big decline in this one, tremendous run over Microsoft. That's a big old red candle. I mean, in any of these stocks that you're trading or you're long, I mean, keep an eye on that candle from yesterday, because man, oh man, if you could get back above the highs from that session, good relative strength, maybe you got something going. But that, along with your 50% retracements in the stocks, those are things which you should be keying on long term.
All right, Ford, we are leaking here this morning. The Q3 EPS, 29 cents, missed by a penny. The sales of 34.6 versus a $34 billion estimate, so a slight beat on that number. They said they're on track to achieve their previously issued EPS guidance of $1.30 to $1.50 for the year. And the stock did pop, but we're leaking here.
Wow, we got to our lowest level since December of 2009, when you had an 863 low. That previous month, you had a low at 711. That was back in November of 2009. I know I picked the worst stocks in the world to be bullish, but for some reason, I'm bullish for it here. Some things they're doing in Detroit here, getting rid of sedans. I think there's some things that they could do with the company to make some money, but we'll see what the plan is. Important day from yesterday. Yesterday's low will be protected. Pre-market high is up at 882. So we'll see if we can get that. That's a target on the downside. Coming back, closed just off its low of the session at 817 and 818. So if you do want to a decline here, I think it's going to be heavily bid all the way down to that low of 817.
Let's look at this action here from Visa. Very interesting after hours chart. I'll read you the numbers here. $1.21 EPS beat by a penny, and the sales of $5.4 billion was a slight miss on the 5.43. So it was essentially in line. So they're in line for both the EPS and the sales. And the EPS guidance they gave was going to be in they said it'll be in the high teen percentage for the fiscal year EPS. And there was like one one trade, it looked like it just dipped and came right back right after the report.
Yeah, someone came in with a panic piece, took it down to 126.22. Holy macro. And then you got a big rebound here. That rebound 138.84. Something going on here. 137.80, 137.70. Your 1, 2, 3 over the last hour or so, that's where your seller's been. So I'll call resistance 138 in this one. Looking at it from yesterday's range, that goes into yesterday's range 140. I mean, that's your big level here. 140.18, yesterday's high 140.04. That was your 2-day high. So that's going to be your super extra major resistance. And if, in fact, this can get back over, I'd be very surprised if this cleared 140 today. Coming back on the downside here with the big rally off yesterday's low, you'll probably see backing and filling here. Yesterday's close way down at 34.26.
All right, we got a couple of major healthcare providers reporting this morning, so let's go to there for a second. We'll do Merck first. Their Q3 EPS of $1.19 beat the estimate by 5 cents. Sales of 10.79 versus 10.88 billion dollars, so a slight miss. But they did raise their guidance. Their fiscal year EPS guidance was raised 8 cents from 4.22 on the low end to 4.30, and the dividend, that is a quarterly dividend, was also raised from 48 cents to 55 cents a share, plus they added to their $10 billion buyback plan. So all in all, a beat on the EPS, a miss on the sales, a guidance raise, and a raised dividend. What does it add up to?
Trading down here, $1.23. Huge run in these stocks. These stocks have been a safe haven in the sector. Favorable rotation into these stocks now. So just have to be leery whether or not you have some profit taking in it. Down $1.23, trading at the lows of the pre-market session. 69.04 is your pre-market low. Man, what do we have? Do we have anything at that area? 68.93 was another low on October 15th, and then you drop closer to the 68. So could be some more profit taking in this one. Merck, very, very unusual move. You had a April low of 52.83, and then you climbed over $73 earlier this month. So I'd be, more of a cautious seller in this one than rushing out to buy it. Also, after such a big move on the upside.
Same story here with Bristol Myers. They beat on the EPS, they missed on the sales, and they raised their guidance. So the Q3 EPS of $1.09 beat the 91-cent estimate by a good deal there. Sales 5.69 versus 5.72 billion, so slight miss there. But again, the raised guidance, fiscal year EPS raised 355 to 380 on the low end of the guidance range. So that's not an insignificant EPS guidance raise there for the year. But Joel, chart?
Man, it's had a rough week.
Yeah.
It's really had a rough couple weeks here. Over $62, made a nice double top there for you folks. It's higher, 63.35 and 63.69. I see also 63.15 high. So someone targeting big that $63 area. I mean, are you gonna, is this going to be like little island bottom here at 48.67? I don't think so. I think you might come down here, maybe not today, but I don't know. I'd be interested here at $49 if I could pick it up on the cheap, leaning on that low. Interesting on the upside. Clearing $51 to me would be very important for this stock. 51.03, 51.17 were the highs from the previous 2 days, and you're still $2.50 away from it. So decent report for BMY. Not out of the woods yet, and just beware. It had a very, very ugly candle in August of 2016 when it went from 75 and change all the way down to 55. And you know what? It continued lower for 2 more months here. So I wouldn't be jumping on the bid here right away. Now BMY may have some more work to do. And then what's that? That drug that begins with an O or something?
Opdivo?
Opdivo. I mean, anytime you see a headline with Opdivo in it, it's like seems like they take $5 off the stock. So I'm not sure what they have in the pipeline, but still got perhaps some work to do on the downside here in BMY.
One more in the healthcare this morning is Celgene reporting a Q3 EPS
Celgene.
of 229 versus 223 cent estimate on the EPS.
Boy.
Sales of 3.89 versus 3.84 billion dollars, and also same thing, a guidance raise. I don't have the exact. Let's see if I can get the exact guidance raise. No, but I just know that there's a guidance raise.
Up 224 and just an ugly looking candle from yesterday here. Do we have any news on PBG? What'd you say? Okay, big pop here. Let's just cover that real quick, and then we will go back to the other company we were covering.
PPG. Oh, I don't know. Let's see.
Trian, it looks like here.
Okay.
Someone took a activist space in it, trading up 477 at 102.55, and this stock has found some resistance here in this area. I'm keeping an eye on 102, 101.82, 101.83 here. Those were your 3 and 4 day highs. So holding above 102, very important for the issue. Another high at 101.92. So we hold above 102 here. You got a chance to fill a big old gap up to 107.81. So quick news on the by Dennis there. Thank you very much. Just jumped up here. Holding 102 is important to go up to fill up that gap. Now that gap's at 107.81. Don't think we're gonna see that today. And
Celgene was where we were.
Celgene and okay, CLG. Big red candle to fight through yesterday. I just use 80.10. I mean, that's still $3 away. A lot of people will be selling ahead of that. You also had a 2 day high at 80.51. So Celgene not out of the woods here on the decline until we get a couple closes above $80.
Yeah, and look, we know there's a bajillion stocks popping here, upside, downside. There's no way we're going to be able to get to all of them. It's 8:32. We only have 3 minutes before our guests are coming on. So let's do like one or two more and see if we can just, obviously throw your tickers in the chat. We'll try to get to all the ones we can. Where do you want to go? Let's do American Airlines. AAL reported this morning Q3 EPS of $1.13 is in line with estimates. Sales $11.5 billion, also in line with estimates for AAL.
Oh, wow, everyone is not flying Southwest and flying AAL here. New low of the move yesterday. That was in a familiar area, though. You had a 30.24 low, 30.60 low was the previous day's low. So yeah, a couple other lows at 30.75 and 30.81. So if you're waiting, if you want to try and be patient on this one, you're looking for a little bit of a fade. There has been, actually yesterday's low was 30.24. So under $31, I think you'll find buyers on this one. Is a good report. Major resistance, let's just call it 32.60. I see 4 highs between 32.44 and 32.75. So you split those 32.60. That's about $1 away. So if you're looking here for major resistance, boom, there it is in American Airlines.
Let's do one more. Let's do Shopify. They're also out here this morning. Q3 EPS 4 cents versus a 2 cent loss estimate. Sales $270 versus $257 million, and the guidance they gave was slightly higher for the fiscal year sales and for the Q4 sales.
All right, getting a little bit of a pop here, up 573 and 128 even. You have been higher in the session. You have been up to 131.60. So that will be your first target on the upside. Yesterday's high up at 134.60. But I see 3 highs right from 133 to 135.5. So I'll call one, if it really gets going, I'd like to see 134 in this one.
All right, it is 8:34. We're going to take a quick break and grab our guest today, Kenny Polcari. He is the director of floor operations for NYSE floor operations for O'Neil Securities. He can go macro, he can go micro, he can give us some recipes while we're at it. So we'll be back in a moment with Kenny Polcari. All right, welcome back, everyone. We're joined now by Kenny Polcari, Director of NYSE Floor Operations for O'Neil Securities. Kenny, how's it going down there?
It's it's been a little bit rocky for sure. The last couple of weeks, have been filled with this increased volatility and back and forth. And yesterday, you saw it really unleash when the markets really broke down technically, right? And then it builds on itself, right? The selling begets selling, and the computer programs beget more computer programs, and it feeds on itself. But for the most part, it's okay. I think what people should realize is, what it isn't is it's not, full-blown panic. People aren't ready to jump out the windows, and people aren't pulling their hair out of their head. And as ugly as the numbers appear, it's not as panicky as, maybe some people on the outside think. That's the good thing about it. I think the other thing that people have to understand is that, the story hasn't really changed, right? Earnings are what they are. They're coming in well. They're projected to start to slow in 2019, but we knew that. The market knew that. Rates are going to rise. They projected to rise in 2019. The market knows that. There's nothing new about any of the macro data. I think what people need to understand is that it's the break in the technical patterns in the market, the break of the 50, the 100, the 200-day trend lines, which then causes a whole nother set of actions based on computer risk management models, right? They trade a lot off those technical indicators, and when those technical trend lines get broken, it just creates a whole set of order types created by the computers that try to manage the capital. And so how do you do that? You sell stocks to raise cash, to put the cash on the side to take advantage, and selling begets selling. And so today, naturally, look what you see. The market, futures are all up because now those same risk management programs overnight go through the data and they go, wow, these stocks are cheap. You got to buy, and boom, the market's going to rally again. I think you can expect the markets to thrash around for the next couple of weeks until we get through midterm elections, because there's been a lot of internal damage, both to individual stocks as well as the broader markets. But once they thrash around and once they build a base and find their kind of stability, then, we'll once again start to focus on the macro data and the fundamentals, and the markets will start to improve, in my opinion.
We're on the line with Kenny Polcari, Director of Floor Operations for O'Neil Securities, CNBC contributor as well. Kenny, I want to get to the important stuff about the market, but what was the recipe for the day today? I mean, I think you had to do something that was like easy on the stomach,
It was easy. Listen, I did nuts today because it was very simple. Walnuts, almonds, pecans, just nuts. Just eat the nuts, because it's just been it's been crazy. I was sitting there thinking about, okay, what recipe am I going to give you today? And usually, listen, if you read my note, I really give you a recipe every day. But this morning, I was just laughing to myself after I read my note, and I said, you know what? It's just nuts out there. So I just gave you nuts today. Nothing dramatic, just nuts.
Okay. And, you're dealing, like with that, institutions and things, of that nature, and the bigger players on Wall Street.
Yep.
And it seems like, man, if the money's coming out of somewhere, it's going somewhere else. So is it like, are you getting these like big sell orders, and then, right?
So listen, here's the interesting part, because they asked me that question the other day on CNBC as well. Right away last week when the market was collapsing, the assumption is, what are your customers selling? I got news to you, dude. I was a net buyer last week, and I was a net buyer yesterday. So you can't assume that, as an institutional broker, whether I'm here on the floor, whether I'm upstairs at a desk, that every institution around the country is selling just because the market's down. For every trade, for every seller, there's a buyer. So somebody's got to be buying when somebody else is selling. And so net yesterday, clients that I speak to, clients that I cover, whether they're both domestic or international, net. I didn't say I wasn't a seller, but net, on balance, I was a better buyer yesterday than I was a seller, which is interesting, because all that really tells you is that, yes, money is moving out of some sectors and being put into other sectors that they feel will perform better if, in fact, the economy is slowing down, right? So it goes from growth to value, right? Value names are going to be great names. Are they boring? Of course they're boring. They're value names. They're boring, but they are names that will do well if the economy starts to shift. And, or at least they'll perform better than the growth names if the economy starts to shift.
Well, the reason your clients are buying, Kenny, is because you had them selling in September, and you had them selling into that expiration, right? Remember that the day that the market hit the all-time high was on the Friday of the Triple Witch, where you just had a lot of unwinding and programs, and that is a big turn. I hope we don't have to wait all the way to December for a turn in the market here. I know it's hard for you to talk about individual stocks here. So let's just talk sectors. And boy, oh boy, you've had just your healthcare sector, your Merck, your Pfizer's, that has been a safe haven as of late. You got a little turnaround. You think it's just a little pullback in this sector, or is the money going to start coming out of there and going back into FANG and all those sexy trades?
No, well, look, here's the thing. I think on days like yesterday, and you have to take yesterday and look at it kind of individually. On a day like yesterday, when the every index is getting smashed and there's this complete negative tone in the market, other than maybe utilities, which were probably the only sector that was higher yesterday, I think, which makes perfect sense because utilities is that defensive play, right? You can't necessarily look at one day's actions and say, oh my God, it's all over for the healthcare stocks. I don't think that's the case at all. I think it felt like it might have been over yesterday because, people would just clearly the sell side was much heavier across every sector. People just getting, whether they were nervous, whether it was their risk management programs, whatever it was. But whoever was selling, there were people on the other side buying. The buyers could choose, though, to be much more patient, right? Because the sellers were clearly coming to them. There was no reason for the buyers to get aggressive and pay up when the sellers were willing to sell it down. And so therefore, no, I don't think you have to worry about money coming out of some of those defensive sectors. I think once the market settles down, there's a lot of value that's been produced because of the price distortions that we now see. Listen, there are some stocks that the story's changed, and so therefore, yes, they deserve the price changes are warranted. But on stocks where the story hasn't changed, right? If the fundamental underlying story hasn't changed and the stocks have gotten punished unnecessarily, then those are where you're going to find the opportunities. And so you got to wait, you got to give this a couple of days because there's been a lot of damage. You got to let it thrash around for a little bit before you're going to start to see the sun again.
Help me out here. Help me out with some macros here. Banks, the financials. Oh, rising interest rates is supposed to be great for the financials. I don't know if this was all factored in last year or not. And then, so here we have a rising interest rate environment. And then I look at the autos and I look at the housing sector and that's screaming recession to me. Please help me.
Right.
Explain this to me.
Well, housing's getting crushed because as rates rise, mortgage rates rise, right? It becomes more expensive to own that house. It becomes more expensive to own that car with rising rates. And so therefore you would expect it. Besides the fact is that there is a fundamental shift, I think, in this country in terms of housing and in terms of the generation, certainly behind me and maybe even behind you. There's a shift in how they're thinking, what they want for housing, what kind of houses they want, where do they want to live? They want to be in the city in small little apartments, or would they rather be out in the suburbs? I'll tell you, in and around New York, where I live, and I live up in Westchester County, housing up in Westchester County, some of them are big houses, lots of property. They're sitting on the market. They're not moving. They're not selling for two reasons. I don't think people want that anymore. I certainly don't think the millennial generation wants it, nor do I think they can afford it. And so therefore, with rising rates, it only makes it that much more difficult, right? And then with tax reform that's just passed, states like New York, Connecticut, Massachusetts, California all got whacked big time because they took away all the deductions, and so therefore it becomes even more expensive to carry and own and operate a large home in some of these states. And so therefore I think there's a couple of stories, a couple of headlines that create the weakness in housing. Certainly in the Northeast anyway. I'll speak about only where I live, because housing down in Florida is exploding. And why? Because you got all these guys from New York and Connecticut say, you know what, screw this. I'm moving to Florida. It's a no income tax state. The weather's beautiful. Housing is relatively cheap down there. But if you get down to, southern Florida between Palm Beach and Boca, housing prices are exploding because of all these people moving out of the high tech states that no longer get the benefit. And so there's a shift there. That's a result of tax policy, and there's also a shift there, I think, as a result of technology and the ability that technology creates for people to kind of move and be and live anywhere they want, yet still have a business.
All right, help me out fundamentally on the automotive sector here. Obviously, Tesla here had a good report. You have Ford and GM, and Ford at 8, 9, 10-year lows here.
Right.
I mean, I'm probably up in the same age bracket as you. I mean, I just don't think that I'm going to have a car in 8, 9, 10 years. I just think that things are changing.
May be a shift there may be a shift in that too, right? The sharing economy, maybe not so much. Maybe when none of us are going to have cars, that's yet to be seen. But one way or the other, I think, I got to take Tesla out of that sector just for a minute when you talk about it.
Sure.
Tesla is kind of a company on its own. It's both a car company and a tech company, more so than maybe GM or Ford. But and it's also, a really high growth company because it's so cutting edge and, the technology that they use and all that. So it's much more of a high growth company versus a Ford or General Motors, which you wouldn't call by any stretch growth companies, right? They're more stable, U.S. kind of Americana names. Now, certainly they've gotten crushed. They've gotten crushed for a couple of reasons. A, because of their underperformance, right? And B, because rising rates will also affect the ability for people to go out and buy cars or lease cars or own cars. And so therefore there's a twofold story there as well. But I also think I think it's a temporary kind of story. I think people are, listen, I think if you're someone that doesn't realize rates are rising or you're not, you kind of haven't wrapped it around your head, then you must be living in a cave because we've been talking about it for a year and a half. And rates should rise because they're still artificially low. And if the economy is performing as well as it is, people should not be surprised to see rates. And actually, you would want rates to normalize because the next time we get another recession, the Fed's going to need room to cut rates again, right? So if we don't raise them, you can't cut them. I mean, you can make them negative like they did in Europe and parts of Asia. But that's more of out of desperation versus kind of normal Fed policy where they're able to move rates to help the economy plus or minus. And right now, I think the economy. Listen, I'm not concerned about the economy at all. I think a lot of this is driven. A lot of the actions over the last couple of weeks has been driven by year-end tax loss selling and profit taking and locking in gains, and then the break of the trend lines just causes the algos and the risk management systems to convulse and rear their ugly head. But I think there's a lot of opportunity created in these moves that we've seen.
Last one, Kenny, and we'll let you run. Thoughts on China here? At what point do you start thinking about getting back into China?
Listen, I think China is a whole other story, right? I do think that their economy is starting to slow, and the longer that this trade war tension talk continues, I think they're going to have more of a difficulty. So I think we're going to see the end of that. I actually think there's going to be a resolution to the trade talks before year end. At that point, then I think you have to watch how the China macro data then starts to play out. Once there's an agreement in place, I think China will rebound. It's not going to certainly rebound to extraordinary rates, but I also don't think it's going to collapse, right? So I think that China is one of those places. I think the market's down 28 or 29% this year. Year to date, I have to look at it quick, but I think the other day I saw it was down 24%. So I think there's value in China, but China is very difficult, right? The markets are difficult to navigate. The information that comes out about Chinese stocks is maybe some would consider suspect. So you have to be careful when you're investing in China. Just like you have to be careful everywhere, but certainly in China you have to be careful. But I do think that once the trade tension talk goes away and we resolve that problem, then I think there's going to be lots of opportunity in China.
We've been on the line with Kenny Polcari, Director of Floor Operations, New York Stock Exchange Floor Operations for O'Neil Securities. Kenny, I got a recommendation for you. If the market keeps going like it is, maybe your recipe for one day, next week can be like Pepto-Bismol or something like that.
What a great idea, actually. I had never thought about that. Well, let's see what happens between now and the end of the week. Maybe that's a good one for Monday morning if, in fact, we end the week on a really sour note.
Thanks, Kenny. Really appreciate talking to you, taking your time out from your busy day on the floor of the New York Stock Exchange.
Bye-bye.
All right, we're leaking here, folks. We are now up only 12 and a half handles at 2676.75. This is the area I was kind of looking for this morning. Mid-range on the session comes in at 2676. I got my handles here. The way we fly through the handles here, I got to get them right. We are in the 26 handle here. Trying to come back mid-range on the session, fading a little bit here into the open. Now also on the upside, 2692.50 is your pre-market high. You have to think 2,700 now is going to be a big hurdle to clear today. Today and for the remainder of the week. All right, Spencer, I think we covered 17 of the 192 stocks.
I don't know, but I want to get to a couple of the biggest losers of the day on my scanner here.
Sure.
One of them is Align Technology, ALGN. Their earnings from yesterday were Here we go.
Oh,
Q3.
no way.
Q3 EPS of $1.24 versus $1.19 estimate. Sales of 505 versus $502 billion. So the Q3 numbers were good. The problem is the Q4 guidance was bad. EPS guidance that they gave for Q4 in a range of $1.10 to $1.15. $1.33 was the estimate. The sales guidance they gave for the Q4, 505 to 515 million. 545 million was the estimate. So big misses for the Q4 sales and EPS guidance for ALGN.
Well, I'll give you the bad news. The bad news is down $57.14 at 233.69. The good news is that it's off the lows of the pre-market session. That low came in at 215.80. Holy mackerel. What a shellacking here. Back and fill to the pre-market low. I mean, if you anybody that has this short here, I don't know if you got to cover it with stock, but I just would be just patient here and wait to see if it tries to nudge back down to the pre-market low. Your high on the upside here, since you made that low, has been 249.26. So there's your resistance. On the monthlies, you are just cutting through everything. I see a pair of monthly lows here. If you're really bearish and you really want to hold out for 220 during the regular session. That's above the pre-market low. But you had two monthly lows, one in January at 220.36, one in February at 219.11. So ahead of the pre-market low, I'd be looking at 220.
All right, we have a special guest with us now, Dennis Dick. You're live.
Hopping back on the show here. Yeah, it was early there on the pre-market show, and then it just started getting busy, and it really hasn't slowed down. So I've been trying to get back out to you guys, but holy cow, we got some volatility here. We just sold off 10 handles. Now we've rallied 5 here, so head on a swivel here. Not a ton of position. I got 41 overnight. So I probably had about 60 coming in, so I've wiggled out about 20 of them, just pre-market volatility here, but a lot of wild ones, and the P&L is swinging around. So sometimes on these days it gets too busy, and that's why I do a little bit more trading, then a little bit more radio. So what's up, guys?
Not too much. I mean, what are you seeing out there? I mean, I know like your immediate,
Chop.
your immediate instinct, when we came on the show, we were trading a good 8-10 handles higher. Like Twitter, you're like, oh boy, that's going to come in. I don't know if you got a chance to short any of that. Tesla's coming
31
in.
and a half when we were talking.
31 and a half here. I mean, the problem is, these things are up, but man, you're talking about overhead supply here. So, how you gauging that?
I mean, and obviously smeg on my face yesterday because I did not see a 700-point sell-off coming. I was saying, yesterday morning that I was putting on my market neutral cap and leaning towards the bull side. I'm glad I didn't go full bullish and start buying stuff. We pulled back, and we just really at that open. You had it. You made a great call on it, Joel. Fading the rally, and it was a suckers rally, and it was straight down all day. So now I'm trading here and just doing my stat herb stuff, and stuff is just bouncing around. But what I'm seeing here this morning is defensive names getting hit a little bit. I mean, these were ridiculous rallies for Procter & Gamble yesterday. Come on, up another $3, and you see a Coca-Cola's taking off and going over 47. I mean, this is just money trying to find a safe place to go. If I owned any of those stocks, I'd be ringing the register in those ones because I don't think that lasts at all. And if the market really started to roll over, it takes everything down. So don't just think, okay, well, Procter & Gamble's never going to go down if the market starts going down. If the market really started to go down, they'll sell everything. So I don't think that's a safe haven at all. I think it's a little bit defensive. It can perform okay on down days. But if we really get ugly, don't think you're hedging yourself by buying Procter & Gamble.
Okay. And just looking, imbalances are probably pretty mixed on a day like this. Did you see anything that was standing out to you?
Yeah, there's a few. I mean, GE 212,000 to sell, that stands out because we're obviously on a big down or on a big up day. So, when you see the sell imbalances, you think, okay, well, maybe there's an opportunity there. I also see Verizon with 73,000 to sell. It's a bit defensive, so it might not be surprising. Bank of America stands out like a sore thumb, 164,000 to sell. Some of the banks are not responding well at all, and this is not good news. I mean, you think the TLT is down. So that, obviously should be good for banks, and that's not really helping much. So they're trading up, but they got slaughtered yesterday. Some of these banks, like Bank of America, was getting hit to the tune of a point. That's a big for 27 to 26. And you're not seeing much of a bounce back. You're seeing a pretty good lift here on the overall market, only up 20 handles. You're seeing the TLT down. That should be an environment where banks should be outperforming in the pre-market, and they're not. They're underperforming in the pre-market. Bank of America only up 0.6%, market up 0.78%. The beta is usually higher. I would expect on this day Bank of America to be up 1.5%. It's not doing that. That's telling me there's just overhead supply and people don't want to own the banks right now. So caution if you just think because TLT is down, the bank's going to catch a rally. Not what we're seeing. We're going to see a lot of chop. We're going to see a lot of volatility. It's impossible to predict. I mean, at this point in time, anybody who's saying, oh yeah, this is what's going to happen, it's a coin flip here. I mean, can we have continued selling pressure? Could we give all this back? Sure, we could, but there is air everywhere, Joel. I mean, really, this downtrend, we went down 700 points or in the Dow yesterday. Could we rip back up and get some of the back? We could. But could we fade this? Could this and could this, turn around and just start taking out the lows and fall another 700? It could do that too. So I think, the way I'm trading is I'm completely market neutral right now, just trading little inefficiencies. The stock pops a little bit too much, I'm willing to sell. The stock drops a little bit too much, I'm willing to buy it. And just, looking at the different relationships there. But it's a tough, day to be even reporting earnings. Like Merck, kind of did everything right in this quarter. It doesn't matter because it's a stock that's held up. They were looking to take profits in it. I took profits. I sold half my Merck position, which I hadn't done. I had Merck for 7 years in my best portfolio. Sold half of it last week because why? Because it hadn't got hit yet and it had been holding up. And I'm like, everything else is getting hit. Eventually they'll start to hit this too. So that's, why I lightened up my Merck position. Glad I did. It was a good quarter. They announced a $10 billion buyback. They do a beat, a slight raise. I mean, they didn't really do anything wrong. Doesn't matter. You're reporting, and they just are looking for stuff to sell. It popped a little bit in the pre-market up to 71.5, and they started hitting it. So it's just tough. And I think you got overhead supply. So trend is still down here. Rips to be sold. Is this enough of a rip here up 20? I don't know to short, but if you're long and you're looking to lighten up, it might not be a bad idea.
What about analyst ratings on a day like this? I mean, on certain days when it's quiet, they can really move stocks now. Wow. How much emphasis do you put on ratings changes on a day?
Almost zero. Unless it's like a smaller stock, which doesn't have a lot of coverage, can be influential. But if you see like a big move, and give us some examples here, Spencer. Like what's got some give us a few ratings here right now, and I'll just tell you what they're doing, and it's just kind of everything moves together. So when you see, a price target change or something, that's meaningless on a day like this. If you see like a real, convicted upgrade or downgrade, that can still move the stocks. You still got to be respectful of it, but not like on a day that nothing's going on. Because you know why? People are too busy to even worry about ratings. They're trying to adjust. They're trying to save money when, it's going down. And they're not that concerned about what an analyst's opinion is right now because there's a lot of other opinions out there that are moving price very rapidly. What do you have for ratings today?
Yeah. So
I've hardly looked. That's how much I care about it.
Me too. I also hardly looked. Just Pandora downgraded from Goldman Sachs.
That doesn't matter because it's got the Siri, right?
Yeah.
Right. Evercore upgrading. The home builders, Toll Brothers.
That matters. Okay. Something like that would matter because they're out of favor. And they've been out of favor, so you got an analyst defending them. So those could show a little bit of relative strength. Obviously, I see Toll Brothers trading up 60 cents. So something like that, that's something we don't see every day. But what I'm saying, something you see every day is like a Facebook, somebody's doing a price target change on Apple or something like that. That doesn't matter. But on the little stuff like that, the little home builders that beat up, an analyst defending them, that can matter.
You have like Cedro initiated a buy, BTIG, so probably does not matter. Chipotle initiated a buy. Loop Capital doesn't matter. $500 price target there.
Probably doesn't matter.
KB Home upgrade. Evercore. Yeah, I said that already. Evercore. No, not much. Hilton upgraded B Riley to buy HLT.
And Hilton upgrade. That's earnings. Got other news this morning.
That's earnings, I think. But yeah, I mean, like Hibbett Sports, they didn't report, and they call it a downgrade this morning.
Something like that. It's small enough that will matter. But the big stuff, if you're concerned about there's a price target or even a rating change in one of the big guns, it doesn't matter as much. Like take this for example, UPS got double downgraded.
Yeah,
today. I believe it was Morgan
Bank
and
America.
It was who else?
Bank America.
Bank America and Morgan both downgrading the stock here today. It's flat. And, it's not trading up with the market, so it weighs on a little bit, but it's not getting killed. Like this was just, a nothing doing day, and you got two analysts, ganging up on your PS, you'd see it down $2.50, but the market's higher, and everything kind of, the betas all start to move closer to 1 when everything's moving. Defensive names move opposite, so, can't consider those like the Procter & Gamble's and stuff, but everything starts moving more together when you get more volatility, which is good for traders like me because I'm doing statistical arbitrage against each other. And when you take out all, the other stuff and it's just moving around with noise of the market, that's good for traders like us. Like typically on these types of days, I have my best trading days, when you get whipsaw volatility. I've always said my P&L is very correlated with the VIX. VIX goes up, I make more money. VIX goes down, I don't make as much money. That's just the way it goes because I'm doing different types of arbitrage strategies, and the inefficiencies become a lot more pronounced when you have volatility. So if I'm extracting little micro inefficiencies there, you're going to have more opportunity on days like this.
Dennis, before I let you go, what stock we haven't talked about a long time and we used as an indicator overall in the markets and especially in the financial sector. What stock we've totally neglected?
What's that?
Deutsche Bank.
And we talked about it on the pre-market show yesterday. I don't know if we had time to mention it, but it kissed $10 yesterday and held. But the European banks, we've been talking about this for a while. They get some little rallies here and there, but look, there's problems over there. ING, what is that? A new 52-week low there. Deutsche Bank, $10. That's a multi-year low for Deutsche Bank, if not an all-time low. You can go to Barclays, BCS, that's in the gutter. RBS, that's in the gutter. I know these are bouncing a little bit with the overall market this morning, but the overall trend is just ugly. There's problems. We've talked about this. Banco Santander, problems in the banks in Europe, problems in Europe altogether. Problems everywhere except the U.S. And now it's like the U.S. is playing a little bit of catch up because we are in a global economy. And if there's problems in Europe and problems in China, there will eventually be problems in the U.S. as well. And that's, what's U.S. has still been the safest place to be. You look at the indexes, we're off, 6% from the highs or 7% from the highs. That's pretty incredible considering somebody said, I don't know if this is right, Spencer, but somebody said China's down 35% this year. Is that right? Is that stat right? That's incredible.
Top of my head, that sounds right. Yes.
Incredible divergence there. That's crazy divergence. When you're talking, a major country, and a lot of people think this is going to be your global world power eventually, down 35%, and the US is down 4 or 5. That's crazy.
All right, and on that note, we're going to wrap it up for the day. So we didn't get to a lot of stocks, but that's okay. We try to cover as many as we can. If you missed any part of the show or you want to hear our beautiful voices again, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Please remember that all the information on our show is for informational purposes only and not meant to be investing advice. Thanks to all of you in our chats. Thanks to Kenny Polcari for stopping by today. Hope you guys have a good day. Enjoy this volatility. Stay safe out there, and we'll be back with you on Friday.